watching us here on a very special episode of The Weekender on CNBC TV18. Now, in case you haven't figured out already, this one has something to do with coconuts. And what in FMCG is coconuts? It is, of course, Marico. So we'll be speaking with the MD CEO, Saugata Gupta. And Saugata, the last time he spoke to us, he gave us a 10,000 crore revenue target and 500 crores in food as well. 5 years later, he's met those. So let's see what he promises us today. Hey, Saugata, what are you looking at here?
These are some of our great products.
These are some of your great products. So, I remember the last time we met, had a conversation like this. This was about 5 years ago, just at the end of demonetization before GST. You had then told me that 5 years from now, Mangalam, we're looking at revenues of 10,000 crores and we're looking at food business of roughly 500 crores. How spot on were you? So, what are you going to tell me today?
Well, we'll talk about the Marico of the future 5 years from now.
Are we looking at 20,000 crores?
See, I think it's important to grow, but I think what is most important is to have a portfolio for the future. If you see the last couple of years, especially post-COVID 2020, we have had an amazing diversification story. Right. And I think this diversification will set it up for long-term, profitable, sustainable growth in the future.
It's safe to say the last 5 years have seen more disruption than the previous 30 years. We had the demonetization, GST, then the pandemic, all these things. What have they taught you?
So I think the biggest thing is a leader or organization's ability to anticipate an issue. Earlier we used to do a 5 years, 10-year plan. Today it's about actually doing an annual plan with 3 options. I think therefore the way of looking at it. The second thing is ultimately in adversity, people are most critical. If we look at COVID, one of the first things we said that it's people first, business can come next and profit last. Ultimately, people make a difference. And therefore, today, we have a set of leaders who are far more caring, far more empathetic. The third thing, I think what is important is the entire last 5 years is the role of digital and automation. If you look at digital today, and I think COVID provided the kind of an accelerator. What could have happened in 3-4 years got compressed in maybe 12 months. Okay. And lastly, I would say the ways of working. Life has become much more simple. We are much more comfortable. You don't take a morning, evening flight for 1 meetings across. Yes. You can do through video conferencing. So I think that has been the other change. The fact that today you can operate in a remote environment with a lot of trust and a lot of empowerment to people.
You spoke about you wanting to be in the top quartile of innovation, top quartile of digital analytics. How do you think you fared?
Now, I think one of the biggest things about Marico has been successful is because of they have been punching above our weight, and therefore we have been able to maintain what I call our founders mentality, owners mindset, and therefore we are not a complete incumbent. We are something I call a scaled insurgent or an insurgent incumbent, we call it. And therefore our ability to create an engine 2, as we call it, house some of the digital brands there. For example, Beardo still operates out of Ahmedabad, Just Herbs operates out of Chandigarh. We haven't integrated into the system. We look at capital allocation, we look at portfolio, we look at reputation and quality and risk management. The rest is up to the founders or the CEO who runs it. So therefore, I think we realized that we need to have an alternate business model to drive that. Simultaneously, we invested in analytics and everything. So I believe we are not the best in the world at all in creating digital brands from 0 to 100 crores. But when it comes to 100 to 500 crores scale up and profitable scale up, we would be one of the better companies and top quartile, and we are the go-to strategic investor for these kind of brands.
When you spoke about 100 to 500, it's only poetic that we've come here where all your food products are. You have the Fitify range, you have peanut butter, I can see some mayo. Food business has grown extremely well. It's closer to 600 crores. You want it to be 850 to 1,000 crores in the next couple of years or so. I just want to understand that where does your right to win lie in those categories? Because there are a lot of other players which are perhaps offering better products there.
The entire approach has been that Saffola has been an under-leveraged brand. Can I use this brand to expand the total addressable market? And therefore, if I look at it, we have 4 or 5 platforms. One is breakfast and in-between meals healthy snacking, where Oats or Munchies operates. There is what I call spreads, which is again, we are offering healthier spreads, like for example, a peanut butter has jaggery, a mayonnaise has low fat. We have immunity as a platform, which we actually started off in COVID as a tactical opportunity. We seem to be doing honey quite well. The last platform is about plant protein. Again, plant protein, I believe, is a category of the future. We are targeting consumers who believe in a healthier way of living, healthier way of life, and Saffola is offering a better for you solution in that.
But isn't that what a lot of other players are doing as well? Perhaps not at a portfolio level, but at a product level. How do you then, as Saffola, compete with those who specialize in those particular products?
So if you look at it, I think, let's be clear that if I have, say, 1 million households today in masala oats and oats, and today they are looking for these kind of solutions, I think a Saffola household is already wedded to the Saffola brand in terms of our ability to offer solutions. Now, a brand like a masala oats is available in 200,000 outlets, and therefore, when it comes to honey, soya, which are much more mass advertised, or snacks tomorrow, we will go into these set of outlets. We are not getting into, say, and pan plus outlets. So we are not going to compete in the impulse segment. So I believe that in terms of the go-to market, in terms of our cost structure, in terms of our ability to cross-sell to these set of consumers, we have a significant right to win. And if you look at the equity of Saffola on health and healthy living, and I think it's one of the most powerful brands which we have.
How much of Saffola do you consume per day?
I think I use a lot of our products.
You're also eyeing profitability. If you can throw light on that.
Let me tell you, the entire foods portfolio makes much more margin than Saffola edible oil.
Okay.
So that way it is, over the portfolio it is accretive. Okay. Secondly, I think if I look at foods, it is important to scale up quickly. So therefore, I believe that in another 1-2 years, honey, soya will scale up 100 crores plus. Once you do that, and therefore our entire focus is to get 4-5 categories into the 100 crore opportunity and then to 200, and build a profitable model with that. So therefore, both we are aware that in both food and digital, we have to, and this is one of the focus areas this year, that how do I drive profitability in foods and digital business.
All right, and before we move on, I see some skin moisturizers as well out there. Are there any categories that you think that you have some more opportunity in? Skincare is one of them. The other one I would presume is wash. You aren't present there.
So I think it's important to anything which we enter, we would like to enter with a differentiated offering, and therefore where we have a right to win. Now, if I look at some of the categories, in India we have experimented and successfully experimented with expanding the total addressable market in Saffola in foods. In a country like Bangladesh, where we have launched shampoo, we have launched baby, we have successfully experimented with expanding the total addressable market using Parachute Advanced. Okay, so therefore, yes, I think there are opportunities. Having said that, I think our existing categories have significant headroom for growth. I think we have identified food, digital and premium personal care, which is currently we have some skin and serums and male grooming, and that part of the business has to grow 20% every year, 15 to 20% for us to think about a kind of a double-digit revenue growth. In the next 5 years, we will have what I call a portfolio of the future, which has far more headroom for growth, and of course, in categories which are lower penetration and ability to win both through penetration and market share.
All right, on that note, what we'll do is just walk around there, have a cup of coffee and a conversation.
Sure.
We have with us Saugata Gupta. Saugata, more than 30 years in the FMCG space. Tell us about some of your memories. You just told me about, spending the entire night in a studio where Shankar Mahadevan was singing.
If you look at my first 9 years, and I was with Cadbury's, and I think at the most memorable time, I was a part of the Cadbury's Dairy Milk campaign, that entire Real Taste of Life, which is I think one of the most iconic campaigns. I was lucky enough to be the brand manager that time, and I think this entire Cadbury's was an extremely great learning journey and a fun journey. So I've always believed that whatever you do in life, you need to be good at the same time you must enjoy doing it. Of course, I did do a 3-year getting out of FMCG, but yes, I think the learning which I had in ICICI was enormous. I was fortunate enough to get into a CX at a very early age. I was 32, and I think the learning, and that was a flavor of a startup in the sense that we had got the license for the insurance company. It was and therefore in those days, I think I would say that early in my life, I did have so-called startup experience.
Your experience and your conversations with Mr. Mariwala, how are they?
One of the best things that Harsh realized early in the days that how do you develop an organization in terms of, there were two things. One, a great culture, a great talent management. The second thing is, of course, what, which is very unique to Marico is even before all the CSR laws came, we had a purpose that how do you have win-win relationships and make a difference to all the stakeholders around us. And therefore, there was a belief in conscious capitalism. We started investing behind this. I think it has been one of the most successful examples of a professionalization of an organization. And this is something which will continue.
When you look at these new age D2C companies, so to say, which you, I believe, have been the only listed company to be championing the cause of this right from day one and still have made the largest number of acquisitions. A lot of the others have obviously followed suit too. How do you value these companies? That's a question that, perpetually perplexes the street.
So I think firstly we look at the promoter, or a founder. So we look for promoters who want to build a company for building to last rather than building to sell. And I think it's important because the chemistry is extremely important. The second thing is the offering itself. Is the offering differentiated enough, and not a me too, and it is fulfilling an unmet need in this one. The third thing, we now have a very sophisticated unit economics model, and I was telling somebody this, that we can almost smell it in terms of, we have something called a digital quotient, we have certain metrics which we have run, and based on our learnings from Beardo and other things, okay? Right. And I think, and lastly, one of the things we look at is that since we started with a minority stake in Beardo, we now have been taking majority stakes, but we ensured that is enough on the table for the promoter to partner with us. Our job is to help him or her succeed and realize his or her full potential. One of the great things that has happened is that our learning has been somewhere we have been able to transfer some of the learnings into our core, and I believe that we are fairly digitally savvy. And I think it's not about just throwing money there, but how do I add value?
So at what point do you plan to take these digital first brands into your own distribution, muscle, and then perhaps scale them at a much rapid pace? Do you have any metric for that?
So ideally, unless it crosses 100, 150 crores, we shouldn't move over to the GT. In food, it's different because in food, I don't think because of the lower AOVs, it's very difficult to have a completely digital model. Right. See, in India, it's very easy to so-called launch in GT and show numbers in the first 1 or 2 years. The question is that how do you have a repeatable model of driving offtakes? And if you look at especially personal care for, if you look at the retention rates or loyalty for existing brands are pretty high. It's not easy to scale up something so quickly. The other thing which is very important is this, that digital brands, what are the three big sources of competitive advantage a digital brand has? The first thing is obviously ability to have far more high velocity innovation, significant agility, and ability to handle multiple SKUs. For example, a digital brand hero SKU will be a kind of a tail SKU for a core kind of a business. And the fourth thing is very, very high competence in digital marketing. Now, all these competencies, when you get into GT, are no longer differentiated competencies because the competencies required are different. And therefore, companies like us obviously have a far higher right to win. And therefore, it is extremely critical first to drive, scale in a, what I call maybe e-com and little bit of a limited this one before even starting to do GT. The temptation to do GTs will be very high. Our GT system, digital brand will be item number 40 on focus, and therefore it may be important, and that is the current thought we have, is that if you look at, we will have a house of brands, maybe 3, 4, maybe another 2, 3 years, another 1 or 2, because we are constantly looking at M&A. I would then almost have a situation where I almost set up a Marico engine 2 with a house of brand with its own distribution system.
Let's spend a little time on your core itself. You said that Saffola is an under-leveraged brand and you wanted to, leverage it a lot more, which is why the food foray that happened. As Parachute grows, do you think there is space for you to have more products under the Parachute umbrella? and just get into categories which you haven't been there using the brand positioning of Parachute?
So Parachute Advanced Master Brand stands for, goodness of coconut. It's natural. We have had obviously some kind of a diversification in Bangladesh market, where we have Parachute Advanced is into shampoo. It endorses a baby brand, and we are looking at how successful it is. So far it has, the results are encouraging. So therefore we are open to that idea, definitely.
Value-added hair oils. I've seen your strategy there. It looks like you're doing a lot more at the premium end in the value-added hair oil space. How do you see this space emerging going forward and contributing to your business?
So I think the reason we are driving this is that if we look at 2010 to 2016-17 journey, there's a lot have happened through Amla, where we were a 9% player. Today we are a market leader. I think it's been a phenomenal case study of disruption of a leader. Having said that, I think we have a issue where our value share is the volume share difference is 9%.
Right.
And therefore we haven't done a great job in the premiumization agenda, which we want to do. If you look at the vectors, one is the sensorial vector, where upgradation happens. The other vector of upgradation is problem solving, which is currently hair fall. There could be tomorrow anti-graying, and therefore we intend to play a much bigger role there. We have been now gaining value share for 3 years in a row, and we intend to accelerate that process and bridge the gap between volume and value share. We believe that a certain section at the upper socio-economic class would require much more modern formats. And if you look at, there is serum at one end, and perhaps there could be things far more sensorially better, hair oils which can come. We are also experimenting with some of them in the Middle East, and therefore we would like to have much more innovation in that area and accelerate that process.
You have been taking your learnings from Bangladesh into Vietnam and some other countries as well. How big do you think these countries could be going forward?
There were two concentration risks in the international business. The first of all was dependence on Bangladesh, and the second, within Bangladesh, dependence on Parachute coconut oil.
Yes.
We have significantly reduced first concentration, because today, the last couple of years, Vietnam has been growing significantly. Today it makes double-digit EBITDA growth. Similarly, I think Middle East, the entire, if you look at the profit pool and the revenue pool available, we are a challenger there. I think one of the things we have done in international business very well, when in 2014 it got integrated into the India business, it had a single-digit EBITDA. Today it has a 20% plus EBITDA, and it makes more, if not equal, some quarters it makes more operating margin in India business. I think our focus has been entirely on building organic growth capability. A lot of companies try just acquisitions. I firmly believe that acquisition has to be an accelerator and top up. It can never be a substitute or an escape button for not doing organic growth. And therefore we have systematically built up capabilities in portfolio, go-to-market, cost structure, and people make a significant difference, because we are not a true-blooded multinational where we replicate process, system, and brands.
Yeah.
We go global in every market. And therefore we have done it systematically, and therefore after the Bangladesh success, we have replicated it in Vietnam. We now want to replicate it in Middle East and North Africa. And now we are slowly growing in other parts of Africa. Even in South Africa, for example, it's a very, very tough market in terms of the overall economic growth and other things, but we have been able to grow at double digits. So I think one of the things is that its international business has been quite a bit of what I call a steady ship. There are no surprises. Last 9-10 quarters we have delivered double-digit growth, except one quarter we gave 9%, but I think it's been consistent.
So, when we talk about Marico of the future, we spoke in FY18, now we're speaking in FY23, where your revenues have jumped from 6,000 crores to 10,000 crores. Assuming you grow at the same pace as your medium-term objective, by FY28 you would be 20,000 crores on the top line. What does your revenue then look like? What do your margins then look like?
Okay, so we should be crossing 10,000 this year.
Yes.
Now, I think it's very difficult in today's world. It's full of complexity, volatility.
But you had that foresight. You had that foresight 5 years ago, so I presume you do now.
No, I think world has changed. Okay, so instead of giving a kind of a number to it, all I can say is two things. One is that we have to be always top quartile in terms of growth. And we are fortunate to be participating in emerging markets, and therefore in emerging markets volume growth is extremely important, protection of market share is extremely important. For us, we will never compromise volume growth and market share for the sake of margins. Margins will automatically happen, it will start creeping up. Secondly, I think one of the things we still have to do, while we have done well in food and digital, I think we need to up the ante on our personal care innovation rate in India. We have been much more successful international business when you have to do that. Continuously, I think while we need to do a full potential of the core, there's significant headroom for in the core. How do we continuously diversify our business? We produce great talent, culture, we have done great work on diversity. So I would say we want to be one of the, what I call, most admired Indian multinational FMCG companies and delivering consistent growth.
You've been here for 20 years, 10 years at the helm. Do you think a lot about legacy these days?
So I think it's important for anybody who has done to leave a legacy. I think, as I said, that my legacy would be a future-ready Marico. In terms of, as I said, there are 4 Ds which we talk about: diversification, best-in-class in distribution. I think progressively a company which is far more ready for facing the digital world. And lastly, I think on the last D is on diversity. We have made significant strides in gender diversity, thought diversity. We now have in our board 3 women, this one in my top team we have 2. We have got a significant localization of management. We now don't run international businesses with expats.
I'll name a company. You tell me the one thing that you can learn from them. Just the one thing, all right? Godrej Consumer?
I think innovation.
Lovely. Britannia?
I think they have done an amazing journey in driving efficiency, distribution, profitability, scale.
Nestle?
Amazingly consistent results, and I think in the last, Suresh's leadership and a complete change of the way of working. And
the new age companies, Mama Earth?
I think it's one company which has been successfully scaled up. So,
any other company that I may have missed that you learned a lot from?
I think we learn a lot from companies like Asian Paints, in terms of driving a lot of supply chain automation, how they have used this. Asian Paints is a very interesting company to learn, I think, and the way they have been able to successfully entrench leadership. I think it's a great learning for them.
Have you started thinking about the book that you wanted to write?
It's not getting time. Someday I will definitely write a book.
And have you gotten any better at singing?
Still terrible.
Or playing the keyboard?
As I said, that those are maybe just hobbies, you just dabble in.
What keeps you coming here every day after 20 years?
I think, as I said, that there's still an unfinished agenda. I do something which I believe I'm somewhat good at, and I love doing it. For me personally, my biggest satisfaction, other than leaving a legacy of creating a Maggi tomorrow, is that how many future CEOs I have mentored. And I'm very happy that some of the team members who have worked with me in the past are doing extremely well. I'm very proud of it. And to me, that's my biggest success, because a job of a leader is to create more leaders and not followers.
Wow, lovely. This is a lot more spiritual, a lot more philosophical, and a lot more thoughtful, Saugata. Thank you so much, Saugata.
Thank you.
Always a pleasure speaking with you.